Good morning. My name is Joanna, and I will be your conference operator today. At this time, I would like to welcome everyone to AGI's fourth quarter and final year-end results release and conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question-and-answer session. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, please press star, then the number 2. Thank you. Mr. Tim Close, you may begin your conference.
Hi, good morning. Thank you for joining Steve Sommerfeld and I this morning. I'll start off with a short apology. I've been dealing with a round of non-COVID related illness in my household, so I may mute sporadically throughout the call as I cough off to the side. We'd like to open our comments this morning by recognizing our team members in northern Italy who, up until a recent complete lockdown, continued to operate across 3 locations during this crisis, all in one of the most intensely impacted regions in the world. Our team there developed and implemented policies and procedures to responsibly and safely operate without a single positive case of COVID. The Italian team has been an inspiration to all of AGI. We are implementing what we learned there across all of our facilities. We learned that we can prioritize the safety of our people while continuing to operate to also safeguard the livelihood of our people. We have many shareholders within AGI and many of that are listening this morning. Steve and I would like to thank everyone in AGI and our partners for the outstanding response and support for each other, for AGI, and for our customers. Now let's jump in here and summarize where we stand today. We entered this crisis with good momentum across AGI. We have record backlogs in our international business, strong backlogs in our North American farm business, and stable backlogs in North American commercial. As we move through Q1, our technology business is up over 200% year over year, and we're set to launch V2 of our SureTrack platform. The beta is out now, and it is a beautiful platform that drives tremendous value for our farmers. We are very excited to get this released. Farmers are preparing to plant or are planting right now in much improved conditions over the last year. These are good underlying fundamentals. The COVID crisis has created substantial uncertainties across all of our markets and operations. Today, we have suspended production in France, Italy, Brazil, and India due to strict lockdowns or regional conditions. As it stands, these suspensions are scheduled for 2 to 3 weeks. While production is suspended, we are continuing with all design and engineering work and quoting on new projects. This work is carrying on rather well with our team settling in to working from home. This is very important work that represents roughly 25% of the work that goes into a typical project. So we are far from idle. Continuing this work positions us well to resume production post-crisis. For any facilities with suspended production, we are utilizing vacation time, leave, and government programs to mitigate the impact. Now, at this point, we believe our backlogs are solid, the pipeline of new business is solid, and we can efficiently resume production in the plants that are or may have production disruptions. In fact, we continue to add to our backlogs each week. For example, Sabe is having a record month in new orders, and our North American farm business intake is higher over the past 5 weeks than the same period last year. At the same time, the uncertainties created by COVID will have an impact on capital decisions for projects, and the timing of those delays is simply unknown. The crisis has been steadily marching west, and we have been preparing our businesses in Canada and the U.S. based on those important lessons from Italy. Multiple states and provinces have declared our products, services, and technologies as essential services, providing us with the opportunity to use what we learned in Italy to implement strict policies and procedures and continue to safely and responsibly operate in this environment. We fully understand the severity of the current situation. We are living through the worst of it in Italy and across our operations in India, Brazil, and France. The most important unknown at this point is the duration of the lockdowns. If the production lockdowns are limited to 2 to 4 weeks, then the impact can be mitigated. As we move into longer lockdowns, then the impact obviously starts to build. At this point, we simply don't have visibility into the ultimate length of the lockdowns. Now, how the world looks post-crisis will ultimately determine the longer-term impact on each business. The cruise line industry is unlikely to bounce back, for instance. For AGI, the picture is quite clear. Fertilizer and seed will need to make their way to fields. Farmers will plant, spray, harvest, and market. Grain will trade, animals will eat, and grocery stores will continue to fill with fresh and processed products, along with newly expanded toilet paper sections. Our customers are critical participants in the world's food supply chain, from farmer to feedlot to food processor. They are experiencing increased demand for their products now, and current or required exemptions from lockdowns in order to continue to supply the world. Our customers are busy during this crisis. My bet is that they will be even busier post-crisis as the world builds additional capacity into the food infrastructure to better prepare for the next crisis that now seems that much more likely. Let's talk about liquidity. We've been proactively dealing with our liquidity prior to COVID, as evidenced by the amended and extended credit facilities that we announced last week. In combination with the debenture we completed earlier in the year, we are well positioned from a liquidity perspective with $80 million in room in our current facilities and access to expand that via our accordion and a very supportive banking syndicate. Given the current crisis, we are in steady communication with our banking partners, working to prepare for the worst, and remain confident that that support will continue. We simply do not know the extent or duration of this crisis, so acting reasonably, we moved to monthly approvals for our dividend. Each day brings more information, and as you would expect, we are digesting the developments each day to determine the impact on our business. We will do nothing in haste. With those comments, I'll turn the call over to Steve to review the quarter.
Okay, thanks, Tim. Our results from the fourth quarter of 2019 were consistent with our previously communicated guidance. Trade sales increased 7% to $230 million, due largely to strong demand for portable grain handling and drying equipment and contributions from acquisitions, most significantly Miltech in India. However, adjusted EBITDA decreased compared to Q4 2019 due to the impact of very poor growing conditions in the U.S., the impact of trade uncertainties, and the timing of sales related to our commercial backlog, as well as an increase in investment in sales, marketing, and technical resources related to our AGI SureTrack platform. Prior to the emergence of COVID-19, activity in the first quarter of 2020 was generally consistent with management expectations. Farm sales have been steady, and our farm backlog at the end of February was 14% higher in the U.S. compared to the prior year, but we did not expect the carryover impact of a difficult 2019 growing season in the U.S. to meaningfully reverse prior to the 2020 planting in Q2. Our international sales order backlog is 30% higher than the prior year and at record levels in Brazil. However, the sales remain weighted to the second half. In addition, the investment in our growing AGI SureTrack platform and other technology and marketing initiatives was higher than the prior year. Due largely to these factors, when compared against a strong Q1 2019 that included a significant contribution from our commercial business in Canada, we did not expect year-over-year organic growth. In summary, and as described more fully in the MD&A, we expect adjusted EBITDA in Q1 of 2020 to approximate Q4 2019 results. On March 20th, 2020, we announced we had amended and extended our credit facility with a syndicate of 5 Canadian banks led by CIBC. With the outbreak of COVID-19, this previously planned extension takes on an increased importance. The facility was extended to March 20th, 2025, and the amendments include an increase in the maximum senior debt leverage ratio to 3.75 for the balance of 2020 and an improved pricing grid. As of December 31st, 2019, AGI senior debt leverage ratio, as defined in our credit agreement, was 2.65 times. And with that, I will turn it back to Tim.
Thanks, Steve. We will open the lines for questions. However, I will preface this by repeating that there are simply too many unknowns to be speculating on possible events. We have 34 locations across 5 distinctly different regions that are all at different stages of this crisis. Each region is implementing a unique response to this crisis. The answer to many of your questions will be simply that it's too early to tell. Let's focus on the facts as we know them this morning. With that, Joanna, let's open the line to questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Should you have a question, please press the star followed by the 1 on your touch-tone phone. You will hear a 3-tone prompt acknowledging your request. Should you wish to decline from the polling process, please press star followed by 2. And if you're on a speakerphone, please lift the handset before pressing any keys. The first question comes from Jacob Bout from CIBC. Please go ahead.
Good morning, and hope you feel better soon, Tim. My first question here is just as we think about, what's going on right now and with these plants shut down in Italy, India, France, and Brazil, of those 4 areas, what would that represent as a percentage of revenue and EBITDA?
Well, Jacob, hey, it's Steve. As a percentage of revenue, that represents almost all of our international production or offshore production, which is our international sales are trending along 30% of our total sales. I would note, though, that our international sales also include exports from the U.S. So what you see in our international sales line, would be partially manufactured in the U.S. We haven't disclosed EBITDA on a regional basis.
Okay. And then if we think about, when things start to improve, how long does it take for plants to ramp up?
Yeah, it's case by case, Jacob. But right now, because of the engineering design work that we're doing, we believe we can do that quite efficiently. A lot of that work, or all of that work, needs to be done. Prior to those orders going to the shop floor. So as long as we have that work going on, then those orders are ready to hit the shop floor as soon as production is back on.
And then if we think about your typical plant, what would be, if we think about from a cost, what would the fixed versus variable be?
Yeah, hey Jacob, it's Steve again. So, the majority of our costs are variable. We are low intense. Our capital intensity is low, and the majority of our production costs we can flex.
Wanted to move on to backlog. So you're talking about record backlog, and but if we think about the projects that are in backlog currently, what is the ability of clients to postpone them, and what is the ability to actually cancel them? And is there any type of financial penalties there at all, or how should we think about that?
Yeah. So each project is a little bit different. But there are substantial deposits involved in these projects. Each of our customers are dealing with the same scenario. It's hard for them to get the staff that they need, in order to carry on with those projects. So we are in daily communication across our backlogs with customers, and very good communication back and forth. Certainly, everybody understands the situation that we're all in.
Okay, and maybe just last question here on the decline in North American commercial. So it's been very strong for the investment has been very strong for a number of years. So backing out COVID-19 and the impact there, is kind of reading in between the lines. Are you expecting basically that this is going to be the new norm after very strong investment, that things are going to tail off over the next 2 to 3 years?
Hey, Jake, we'll see you again. So I think in Canada that's the case. We had a period of heightened activity, and a year ago was really at full steam. The investment in Canada continues, but not at the pace it was 12 months ago. The U.S. is a different story. The U.S. has been bouncing along the bottom for a few years now. We feel there's reason for optimism in the U.S., especially, COVID aside again, especially if, with improved trade relations between U.S. and China and an improved macro ag backdrop. So, the decrease in Canada may very well be taken up by an increase in the U.S.
And can you remind us again what the split is between U.S. and Canada for North America commercial?
Yeah, so that would very much change year to year. The U.S. market is certainly much larger than the Canadian market.
Okay. I'll leave it there. Thank you.
Thanks, Jake.
Thank you. The next question comes from David Newman of Desjardins. Please go ahead.
Good morning, gentlemen.
Morning.
Very good. I hope you're feeling better, Tim. So obviously you're hunkering down here a little bit. Are you going to be putting some of your, obviously it'll go to the back burner, I think, on M&A, and I'm thinking about, revisiting growth CapEx, and it sounds like going to month on the dividend, you're just kind of seeing what the timing is related to how long these plants might be closed, and then make that decision, because the yield would suggest that maybe, a cut might be coming. So any thoughts on uses of cash?
Well, yeah, I think the world is hunkering down, David. So that's
for sure.
maybe the understatement of the day. We are being extremely cautious. So all capex and is certainly on hold and being assessed as we go through this crisis. Yeah, I mean it is a day by day, and we're trying to be as cautious and bring together, as I said in my comments, is digest and incorporate all of the information that we're learning on a daily basis. And so the extent of those delays will determine our path. A couple weeks shutdown actually isn't that unusual in a lot of our plants. So unusual. In a lot of our plants. So it completely comes down to how long this lasts.
Okay. And then are you seeing any supply challenges, either for inputs or for obviously marketing the product? Any supply chain challenges that you're seeing, other than the blockades that we saw in the first quarter here? But any other things you call out that you're seeing any slowdown in just supply chain?
Well, those blocks. Yeah. Well, I mean, the two different perspectives on that. Our supply chain, we've facility by facility, part by part. We've SKU by SKU. We've looked at how critical and what our inventories are, and what the supply chain looks like by component, by part, by material, and are implementing the strategies to ensure that we can continue to operate. From a supply chain, from our customers' perspective, I think the challenges are movement, people, and region by region. How is rail? How are trucking? How are they able to operate in this environment? So it's day by day.
And maybe you guys could just remind me. You've got some actually silver linings here. One being obviously steel costs. And that represents a pretty significant portion of your variable costs. And then I look at foreign exchange. I think you have a fairly substantial U.S. dollar component on translation, but obviously that'll be a bit of a tailwind, I think, just on your reported numbers. And I kind of look at across a few of the things that seem to be obviously lower interest rates and for your farmers and altering payment plans. I mean, so maybe just kind of remind us on the steel side and the FX side, and what you're doing is in terms of taking advantage of these near zero interest rates.
Sure. Yeah. So on the steel side, you're correct, David. Our steel component is typically 25 to 30% of our COGS. We've always been very active in the steel market and strategic with respect to our procurement strategy, and we'll continue to do that. We're in a good steel position today compared to the prior year, which will be a tailwind in 2020. You're right on the foreign exchange also. We are long USD. It's disclosed in our audited financials, the sales denominated in US dollars and the costs, and the delta is about $100 million US dollars. A strong USD impacts other things, the price of steel, price of inputs for foreign markets, etc. But generally, it's a very positive thing for AGI when the CAD is weaker than the USD or weakens compared to the USD.
And is the steel cost indexed to the Canadian dollar in Canada?
Well, steel prices in Canada will increase with a weaker Canadian dollar.
Right, okay. But what would be the split U.S. steel, Canadian steel kind of thing?
You would look again at our production facilities. We have a steel is the most important to our bin business, and we have a bin manufacturing facility in Canada and one in the U.S. So it's important in both markets.
Okay. Yeah, and steel pricing is over time a pass through across the industry. And I think to the last part of your question, David, farmers are getting and will continue to get a high level of support in this environment. Had been previously, they had been historically. They will get the support in this environment. FCC, I think, unveiled a $5 billion a support package from a credit guarantee perspective that whether it's needed or not. And we expect robust support in the U.S. as well.
So that could be a big tailwind coming out of this.
Well, I think so. If you look anecdotally, we can see our customers are out planting. They're buying fuel because it's at record lows or recent record lows. They're stocking up on all of the inputs that they need for a typical year. They've been practicing work from home and quarantined type of work environments for many years.
Yeah, no, for sure. Very good. Thanks, Sherman.
Thank you.
Thank you. The next question comes from Michael Dumais of Scotiabank. Please go ahead.
Hey, good morning, guys. So a lot of questions have been asked, but just wondering if at all you're able to quantify the EBITDA impact from the 2 to 3 week suspension. I know you talked about the revenue, but just on the impact, and then as a clarification, how much of that impact fell into Q1 versus Q2?
Hey, good morning. As Tim mentioned in his comments, there's so many unknowns today, so many variables that we aren't prepared to quantify impact. What I will say is the shutdown of the duration of 2 to 3 weeks. There will be a revenue impact in Q2 certainly, but it's revenue that we believe we will make up in the back half of 2020.
Okay, that's helpful. Look, I'm obviously trying to think about the numbers here, and I know you guys are a little hesitant to provide some guidance. Obviously last year, a number of challenges for AGI. I guess this year, we're starting with a lot of uncertainty. And maybe just to get some of your thoughts for the potential pluses, if COVID is sort of a shorter period issue. Some of the minuses. And just for context, management in the street, I think we all expected EBITDA growth in 2020 or significant EBITDA growth versus 2019. So when we put all the pieces together, does an EBITDA expectation reset back to 2019 levels make sense for 2020? Just any color really you can provide us there.
Yeah, we just don't know at this point, Michael. It's there's way too many variables for us to be making a call or a forecast at this point. It's just too early to tell.
Okay, no, that's a totally fair answer, Tim. I think it's hard for all of us to sort of figure this one out.
I guess I should answer your first part of your question. You asked for some of the positives. The negatives are the unknown, and certainly as evidenced by the production suspensions. the positives, I mentioned in my comments, our customers primarily are receiving exemptions from shutdowns. They have to operate for the world to eat. As part of the supply chain in support of those customers, we are captured by those essential service declarations as well. So that provides us the opportunity to operate in this environment. Many and most businesses don't have that opportunity. So we have a team across AGI that are overwhelmingly looking to continue to work and continue to do our part to contribute during this crisis. So we've demonstrated in Italy the ability to do that, to safely and responsibly operate in this environment. In one of the most intense regions in the world, we were able to do that without a single positive case up until the 14-day lockdown they had just on Saturday. So, with those, I'll repeat it again here because it's an important point. With those lessons learned there that we're implementing everywhere, we believe there is a way to operate safely. Number one priority across our business is the safety of our people. We believe we can safely operate and as we go forward. So, it provides us with the opportunity to continue to operate in this environment. So there's many pluses to that across the board. I think coming out of this crisis, I think the importance of that supply chain, that sort of unseen global food infrastructure, is going to be top of mind from a government perspective and from a investment perspective. The world will overbuild in order to account for this type of crisis in the future. I think there's certainly highlights. What we've been talking about over the last number of years is that there's a massive amount of investment needed for around the world, even in mature markets, to make the existing infrastructure more efficient, more productive, and more reliable in good days, and certainly as needed in days like these.
I appreciate the comments, Tim, and obviously good job in Italy, and good luck for the rest of the team.
Thank you.
Ladies and gentlemen, as a reminder, should you have any questions, please press star one. Ladies and gentlemen, as a reminder, should you have any questions, please press star one. The next question comes from Steve Hansen of Raymond James. Please go ahead.
Yeah, good morning, guys. Tim, the decision on dealing with this crisis in Italy and France and now India seems fairly logical. Is there any reason that Brazil was added to that list as well, just out of curiosity?
Brazil is more regionally. It's not. They haven't moved to government required lockdowns at this point. It's just region by region, and so each case is going to be slightly different. So in that case, we're like many of the businesses in that region, following the lead and of other regional businesses. So
understood. That's helpful. And just thinking forward, I mean, I think we all recognize how uncertain this all is and appreciate the challenges. But do you think that an update to the market intra-quarter, if there is greater visibility at the time, is going to be warranted? I'm just trying to understand. I mean, we're sort of at this odd period in the calendar here now where we're not going to hear from you for a couple months. Just trying to understand. Yeah. Do you plan to give updates?
I mean, short answer is yes. We plan to provide as much transparency as we hit inflection points, as we gather material information. We plan to continue to be open and continue to communicate.
Okay, great. And then just maybe finally on a different topic of more optimism around AGI SureTrack. I think in your opening comments, you suggested you've had good traction there. Do you want to maybe give us an update as to what you're seeing there? The last quarter, you had some constraints, as I recall, in implementation or meeting demand. Maybe just give us an update as to where you're at.
Yeah, we ramped up production through Q4 and into Q1 from a hardware perspective, and now have very good inventory levels brought down lead times across the board, and we're sitting in a very good position. Those businesses continue to operate, to manufacture, to install, and now with the release of our second version, which is just it's a beautiful platform to operate, and it has expanded capabilities. We hope to launch in the coming weeks. So very positive on the rollout and expansion of the technology business, having good impact on integration and cross-selling across AGI, all of our traditional products that are being brought into and able to monitor, manage, and operate within the SureTrack platform.
Very good. Good luck with managing all these challenges, guys. Cheers.
Thank you.
Thank you. There are no further questions at this time. You may proceed.
Okay. Well, thank you for your time this morning. I appreciate the continued interest and support. We'll sign off here and just ask everybody to stay safe. Thank you very much. Take care.
Ladies and gentlemen, this concludes your conference call for today. We thank you for participating, and we ask that you please disconnect your lines. Have a great day.